The information presented in this video is for educational purposes only and should not be considered financial advice. Welcome, O Trader Tales. Today, we're gonna crack the hidden truth of an indicator you think you know, but you're probably using all wrong. I'm talking about VWAP. For 99% of traders, it's just another squiggly line on the chart. They see the price cross it, they buy. It crosses back down, they sell. And they get chopped to pieces. But what if I told you that this one line is the closest thing you can get to a roadmap of where the big money, the institutional players, are placing their bets? Stick around, because we are about to expose how you can use VWAP to trade alongside them, not against them. Alright, let's get this out of the way. VWAP stands for Volume Weighted Average Price. The key word there is volume. Unlike a simple moving average that just cares about price, VWAP cares about where the action is. It gives more weight to the price levels where the most shares have traded. Think of it as the true average price or the market center of gravity for the day. See the difference? The SMA is flighty. The VWAP is heavy, it's substantial. And that leads us to our first and most important hidden truth. Here it is, the secret you need to know. VWAP is a primary benchmark for institutions. Mutual funds, pension funds, hedge funds. Their goal is often to fill massive orders without moving the market. So, their performance is often judged by how well they execute relative to the day's VWAP. If they're buying, they want to buy at or below VWAP. If they're selling, they want to sell at or above VWAP. This is your edge. When you see the price pulling back to VWAP and holding, it's not magic. It's often a sign that large institutions are actively buying, defending their average price. That's a high probability entry point. Because VWAP is the fair price for the day, it acts like a magnet or a dynamic level of support and resistance. In a strong uptrend, the price will try to pull back to the VWAP. This is your buy the deep zone. The institutions are waiting there. Look for a bounce off VWAP to confirm your entry. In a downtrend, it's the opposite. The price will try to rally back to VWAP, but sellers will often step in. This is your short the rip zone. Price hits VWAP and gets rejected? That's your signal. Ready to level up? Let's talk about two advanced techniques the pros use. First, anchored VWAP. Standard VWAP resets every day. But what if you want to know the volume-weighted average price since a major event, like an earnings report or an FDA announcement? By anchoring the VWAP to that specific candle, you can track the sentiment of everyone who has entered the stock since that catalyst. It's an incredibly powerful, customized support and resistance level. Next up, VWAP standard deviation bands. These bands tell you when the price is getting stretched too far from its fair value. Think of it like this. When the price touches the outer bands, it's like an elastic band stretched to its limit. It's either going to snap back towards the VWAP, or it's a sign of an incredibly strong trend. This helps you avoid chasing overextended moves and can even pinpoint reversal opportunities. So let's recap. VWAP isn't just a line. It's a window into the institutional world. It's a benchmark for the big players, a dynamic magnet for price, and with tools like anchored VWAP and bands, it's a complete trading framework. Stop trading blind. Start paying attention to where the volume and the big money are. Start using VWAP the right way. Now I want to hear from you. What's the number one insight you are taking away from this? Are you going to start using anchored VWAP? Let me know in the comments below. And if you got any value from this video, do me a huge favor and smash that like button and subscribe to Trader Tales for more deep dives just like this one. Hit the bell so you don't miss the next episode. Until then, trade smart.